Hi, Bruce here from Voodoo Trading. I would like to welcome everyone to an overview of how to build a systematic rules-based trading strategy. This video provides an overview on how to build a systematic rules-based trading strategy that fits your personality and is easy to repeatedly execute. At the end of the video, we will provide you with a link where you can download our free 26-page ebook that goes into more detail into the steps you need to take to build a rules-based trading strategy. Trading is not difficult, but it is not easy. Trading is very emotional. In reality, in order to be a successful trader, there are only a few simple steps that you need to follow. Number 1, you need to find a market that is trending. If you're trading on the long side, you need to find a market that is in an uptrend with increasing prices. Number 2, once you have identified a trending market, you need to identify a suitable entry point so you can participate in the uptrend. Number 3, you need to place a buy order with your broker along with a stop-loss order that will control the amount of money you will lose if you're wrong. Even the world's best traders are wrong more often than they are right. You need to get comfortable with this reality. Lastly, you want to stay in the trade until the trend ends and you can bank your profits. That seems pretty straightforward, doesn't it? So if this is all that's required to become a successful trader, then why do over 90% of traders lose money in the stock market? In reality, there are only 2 reasons that traders are not profitable. Firstly, they do not have a written, systematic, rules-based trading strategy that has been backtested to confirm that the strategy has a positive expectancy and will make money. Secondly, once they have developed and backtested their trading strategy, they become too emotional and do not consistently execute their trading plan day in and day out. The goal here at Voodoo Trading is to help you develop a systematic, rules-based trading strategy that removes emotions from the trading process. You will build your trading strategy using a trend-following approach. A typical trend-following trade is represented by this schematic stock chart. A trend-following trade usually initiates from a breakout from some sort of consolidation range. You enter the trade on the breakout and ride the trend using a trailing stop-loss until the trend ends. There are 6 trading rules that every systematic trend-following trading strategy should include in order to be successful. The first key component of a complete trading strategy is determining which markets you are going to trade. To be successful, you need a diversified portfolio of markets that you can trade. Remember, we want to find the markets that are trending, and fortunately for us as traders, not all markets trend at the same time. You may have a period where growth-oriented markets such as technology are in a bull market, and value markets such as commodities are in a bear market. But at some point this relationship will invert and value stocks will outperform growth stocks. You need to follow a diversified portfolio of markets so you always have access to the best trending markets. Once you have a portfolio of diversified markets, you need some sort of filter criteria to help you identify the markets that are in the strongest trends and that you should consider trading. As a trend-following trader, you will want to focus on some sort of breakout or moving average crossover signal to identify potential trade setups. There's no holy grail entry signal. You will choose a signal that you understand why it works and have the confidence to take the trade when the signal appears. You'll keep a watch list of markets that you have identified as trending. Once you have a watch list of markets that are trending, you will need to identify a clear trigger that you will use to enter the trade without second-guessing the decision. The trigger is usually a continued price breakout above the resistance or moving average you identified in trading rule number 2. Every day you will review your watch list to determine if a trade order should be placed based on the trigger you have identified. Most new traders wrongly assume that the key to successful trading is knowing when to enter the trade, when in reality, the other 5 trading rules are equally, if not more important. Before you enter any trade, you must know where you're going to get out if your bet is wrong, and you will be wrong more than you are right. The world's most successful traders have a win rate of less than 40%. You need to embrace this reality if you're going to be a successful trader. Your initial stop-loss exit price could be a percentage or price decline from the purchase price. Your initial stop-loss order should be entered with your broker immediately after you enter a trade. This will help remove emotions from your trading decisions. If your stop-loss is hit, you are automatically stopped out of the trade to limit your losses, and you can continue to hunt for more profitable setups. Your next trading rule will determine how much money you will risk on any trade. Money or risk management is by far the most important trading rule. This rule will identify how much of your trading account you are willing to lose if the trade does not go as planned. Many studies have been undertaken that prove that you should not risk more than 2% of your trading account on any one trade. Even 2% is probably much too high for the average trader. Remember, if you lose 15 trades in a row, and that will happen at some point, using a 2% risk, you will have a drawdown of 30%. Most traders can handle a 20% drawdown, but anything greater than 20% and they start to panic and doubt their strategy. For most traders, it would be advisable to start with a 0.5% risk per trade. This rule, combined with trading rule number 3 and trading rule number 4, will determine how many shares you can purchase for each trade. Your final trading rule lets you profit from all the hard work you put in implementing the first 5 trading rules. It's the profit stop exit. With a trend-following trading strategy, you need to resist the urge to sell your profitable positions and let the trade continue so you can capture as much of the trend as possible. However, you need to ensure that for every profitable trade, you have a trailing stop that follows the trade up and automatically gets you out of the trade once the trend ends. Let's look at a real-life example of how your trading strategy will work. Here's a chart from Microsoft illustrating an actual trend-following type trade using our trading rules. In this example, Microsoft is in our portfolio of markets that we follow, which is trading rule number 1. We added it to our watch list when it showed up in our daily market scans as a potential trade setup because it broke above its 200-day moving average, which was our criteria to identify a trending market. The 200-day moving average is illustrated by the purple line on this chart. This is our trading rule number 2. As per our trading rule number 3, we entered the trade on a breakout of Microsoft's previous high of $113.68. Trading rule number 4 required that as soon as we entered the trade, we place a stop-loss exit order slightly below the price of the breakout to minimize our downside risk. Our trading rule number 5 states that we'll only risk 0.5% of our total portfolio value on this trade. Using this criteria, and knowing our entry price and stop-loss price, we determined that we could purchase 200 shares of Microsoft. For trading rule number 6, the profit stop exit, we used a 4 times average true range volatility trailing stop that eventually stopped us out of the trade with a profit of approximately 48%. You notice if you look at the right side of this chart that our profit stop exit shielded us from significant emotional and financial damage from a significant market decline that occurred after we exited the trade. In the video description below, you'll find a link where you can go to download our free 26-page ebook on how to build a systematic rules-based trading strategy. This ebook will walk you through the steps required to develop a complete trading strategy. The book also includes a template that you can use to formalize your trading strategy. The goal is to create very concise trading rules that are very clear, easy to follow, and remove emotions as much as possible from the trading process. Please download the ebook and let's get started trading your way to financial freedom.